This conference will now be recorded.
Yeah, today we are starting consolidation of investments with S4 HANA Finance for Group Reporting. This particular course designed for the uh, consultants who already experienced in group reporting. So this course focuses on consolidation of investments, and this course is not going to talk about basic configuration of group reporting. When I say basic configuration, creating consolidation groups or creating consolidation units or versions or currency translation, how to configure intercompany eliminations, or uh, uh, how to do the management consolidation or intercompany matching and reconciliation. No, we are not. This course is not going to explain those topics. This is designed for the people who already know group reporting basics and configuration, already experienced in the group reporting. So in this particular course, the goal of the course is it will prepare you to get set up advanced consolidation of investment topics. So it only talks about consolidation of investments. So, as per accounting standards, right, whatever accounting standard, IFRS or US GAAP or local GAAP, whatever accounting standard, when you want to do first consolidation, when you want to do the subsequent consolidation, step acquisition, capital increase. So, there are some activities can be performed in legal consolidation. So, those activities relevant to consolidation of investments. Consolidation of investments relevant activities we are going to understand in this particular course. When a particular consolidation unit, right, goes out of the group, that means the holding company taken back their investments from the subsidiary, how the accounting entries are passed and how the system is generating the entries. So here the point is SAP already developed what are the entries to be passed for all these activities, whatever activities I mentioned in the content. Here you see initial consolidation, subsequent consolidation, step acquisition, all these activities. For these activities, what entries to be passed, SAP already configured using 1SD content. As a consultant, I should know like how can I understand. So first I have to understand those entries, whatever SAP generates, or whatever the consolidation of advanced consolidation of investment. When I run in the consolidation monitor, when I run the consolidation of investment activity or task, basically, I should understand what are those entries, how the goodwill is calculated, how the minorities are calculated. When it is a step acquisition, when the investment percentage is increased, what are the entries passed by the system using this particular consolidation of investments? And I need to understand why those entries are passed. And if I want to change in those, suppose SAP delivered with some content FS items, right? So goodwill, they used one account, one FS item. Investments, they used one FS item. Capital, they used some FS items. Retained earnings, they used one FS item. So if you are not, if your FS items are not same, or if you want to change the FS items what SAP provided, right? So where to change that configuration, you need to understand for the advanced consolidation of investments, that we are going to understand. So where to change. So if negative goodwill, I want to change the account. If it is positive goodwill, I want to change the account. So I want to store my retained earnings, or I want to transfer my retained earnings to the net income clearing account. I want to change those FS items. I want to change my NCA targets. So where to change, how to change, because it's already configured by SAP. You don't have access to change the configuration, but you have an access to change the FS items, whatever you need. right? We are going to understand how to do that. And I have mentioned here the audience functional consultants who are already working on group reporting are trained in S4 HANA, S4, S4F95 group reporting. And for this, the business process knowledge of financial consolidation is very much required. So in order to understand this entries, you should have very good accounting and financial consolidation knowledge. So this course based on release uh, 2022 S4 HANA 2022. We have S4 HANA 2022 server, so we will use S4 HANA 2022 server. Right. And I said this. There are some activities we are going to understand in this particular consolidation of investments topics. Those are first consolidation, subsequent consolidation, step acquisition, changes in capital, changes in shares, accounting method change, partial and total transfers, partial divestitures, total divestiture, horizontal and vertical mergers. So these are the activities available in advanced consolidation of investments group reporting, using group reporting. Now, if you observe down, I have written rule-based approach. We are going to understand initial consolidation, subsequent consolidation, step acquisition, changes in capital, and total divestiture. If you observe, there are some activities which can be performed by activity-based approach. For example, partial and total transfers. This activity is not possible with the rule-based approach. So what I mean, when we learned S4F95 group reporting basics, they in the particular book they explain how the rule-based approach works. So we create some reclassification methods, and we will create investment eliminations and capital eliminations, goodwill calculations, and minority calculations. So these calculations how to perform using rule-based. So we created each and every we created a method. In the method we added the sequences for each elimination or each calculation. So rule based you can configure. Why we have to configure everything in the rule based? So in the rule based, whatever content SAP delivered, in that you don't find the goodwill calculations. If your customer is going for I mean rule based and they don't have goodwill calculations, and whatever SAP delivered with 1SG content, you can use it. You can check and you can test and you can use it, right? We are going to understand that also. So some activities available in activity based approach, those are not available in the rule based approach. And also rule based approach we discussed in S4F95 how to do the first consolidation and subsequent consolidation, both first and subsequent consolidation in the rule based we discussed. So only now you want to configure total divestiture in rule based approach, right? So in the rule-based approach, we want to configure the total divestiture. What is total divestiture? So I have taken back, holding company taken back entire 100% investment from the subsidiary. So I want to go with the total divestiture scenario. So for that, you have to configure rule-based approach. Rule-based approach, you have to create each and every sequence. So you have to uh, reverse the reported data, whatever reported data for the consolidation unit subsidiary. You have to reverse first consolidation document, you have to reverse subsequent consolidation document, and you have to clear the income. All these rules you have to configure using rule based approach, right? So this I'm going to explain how to create for whatever task or whatever activities I mentioned in the rule based approach: initial consolidation, subsequent consolidation, step acquisition, changes in capital, total divestiture. We are going to configure, we are going to create the reclassification methods and sequences for these activities. Now you might have observed one point. I'm talking about 1SG. I'm talking about 1SG content, and also I'm talking about two approaches: activity based approach, rule based approach. So 1SG content comes with the best practices for both activity based approach and rule based approach. The difference between these two: activity based approach, The control is with SAP. What I mean, the control with SAP. So they developed this one based on one accounting standard. That may be IFRS, that may be US GAAP. All right. So based on accounting standards, they developed, SAP developed. It's like in BPC, we used to have something called IFRS starter kit. So what is IFRS starter kit? So IFRS starter kit, SAP already developed. They created the models, they created the dimensions, they have given the ownership structure, rates, everything, right? They developed the consolidation groups, consolidation units, everything, and they have given the business rules configured. You just need to feed the data and you have to adopt the particular IFRS starter kit according to your customer requirement. When I say adopt, so the FS items you can adapt, the structure you can adapt, the business rules you can adapt, right? But maximum 90% of structure is, I mean, IFR, using that IFRS starter kit. Even if you load your client master data and transaction data, you can get the all the activities of consolidation of investments and the legal consolidation. That is the same approach here, activity based approach. Everything configured, right? You just need to feed your master data, or you just need to maintain your consolidation units, you just need to maintain your consolidation groups. Then you just need to add your transaction data. If it is SAP, you have to release from the act doc here. If it is non-SAP, you have to load it with FSV files. Also, you need to provide the control data. Control data means what is your investment percentage, what is the relation, like who is the holding company, subsidiary. If you give that with activity, if you feed the control data, system can automatically. So when you execute consolidation of investments in the consolidation monitor for activity based approach, 2101 activity we use, 2101 task we use. So system will automatically generate all these entries for all these activities. So activity based approach, one ST delivers, which is automated, which is already developed and given by SAP, like best practice content, like a best practice you can directly use. Rule based approach, SAP given, but they have not given based on any accounting standard, they just given some content, right? So it can, rule based approach can calculate first consolidation, subsequent consolidation, all the step acquisition, changes in equity, changes in capital and total divestiture. But the problem is, in this rule based approach, they never mentioned, they never talk about the goodwill calculations, right? If or what should be done in the negative goodwill, what should be done in the positive goodwill, right? So there are some differences, between activity based approach, rule based approach. I'm going to explain what are the difference between activity based approach and rule based approach. So this activity based approach we are going to cover in this particular course, and also we are going to cover rule based approach. We are going to cover rule based approach. We are going to configure all these, including uh, investment eliminations, capital eliminations, goodwill calculations, and minority calculations for all step acquisition, changes in capital, total divestitures. We are going to configure those things using rule-based approach. So let's understand the course content. So we will understand from tomorrow. We will understand the particular consolidation scenario, what we are going to execute in the system. So we have Europe company. Yeah, we have Europe as a group. In the Europe group, we have subgroups like Central Europe, Southern Europe, Eastern Europe, right? So there will be a group, Europe group, and we are talking, we have subgroups also for that group: Central Europe, Southern Europe, Eastern Europe, and each group having two three consolidation units. For example, if you see Central Europe, I will add Switzerland and France. Southern Europe, we will add Spain, Portugal, and Italy. And Eastern Europe, we will add Poland and Hungary. And the total Europe group, we have Germany is the holding company. So we are going to understand the consolidation scenario, and we will understand what is activity-based consolidation of investments, what is activity-based approach. Then we are going to load control data, plus control data means investment percentages with activity. We are going to load the reported financial data for SAP and non-SAP consolidation units, including control data. We are going to perform activity based capital consolidation, you can see. Yeah, then we are going to understand first consolidation, subsequent consolidation for some group. So this M means Central Europe, GRM 00 is Central Europe, GRE is Europe. So what here the main target in earlier sessions, suppose if you take S4F95 or group reporting basic sessions, we performed consolidation for only particular group, one group, and we have not performed consolidation for the one level up. So for example, GRM is the subgroup for GRE. That means Central Europe is the subgroup for the Europe, right? In the rule-based approach in S4F95, we understood how to perform consolidation for the Central Europe. Now, if the Central Europe, when you are executing one level up at Europe level, how the consolidation happens automatically, how the consolidation of investments. So there is something called minorities in goodwill when you execute at Europe level, right? So Central Europe is the subgroup and GRE is the main group. So subgroup, what when you execute GRE level, system executes the result of GRM. I mean, it will calculate the eliminations for the GRM group, Switzerland to France. Then on top of that, whatever goodwill is calculated, system will pass minorities in goodwill one entry at GRE level. We are going to understand. That's why I mentioned both the groups, subgroup and main group. Here also explaining. So here also one more thing we have to understand when you are performing first consolidation, right? System can generate positive goodwill or negative goodwill. So SAP activity based approach comes with particular configuration for positive goodwill they use direct elimination. For negative goodwill they use write off, right? Direct write off. So what are the difference between these two approaches? So how the system is going to post entries, we are going to understand. So GRM to GRM group, Central Europe group, we have positive goodwill. When I talk about GRS group, Southern Europe group, it's post the negative goodwill. So how the P&L accounts or P&L net income is influenced based on this particular negative goodwill, how the rate of happens, that we are going to system is going to generate the entries, we are going to understand. And when we are talking about Southern Europe, we have at equity method. In activity based approach, at equity method is possible. In rule based, at equity method is not possible, correct? If you in the rule based, in the reclassification method, when you take uh, equity method, right? So when you assign equity method, so where you mention equity method in rule based, when you create a consolidation structure, in the structure you are going to assign a method 20, right? 20 means at equity method to the particular consolidation unit, right? So whatever is 20, system is not going to read, right? Only the method where the method is 10 or 00, system is going to consider for the consolidation, and it generates purchase method entries for the consolidation of investments in rule based approach. But here in activity based approach, equity at equity method is possible. System automatically generates the entries based on the control data whatever you given. So we have a group GRO, which is Eastern Europe. In that, Poland and Hungary, both entries are there. Poland invested less than 50%. Let's say Poland invested 30% in Hungary at equity method, VSN, and we will see how the entries are passed for the at equity method. And for all these, whatever first consolidation, subsequent consolidation, we are going to talk about. Okay, for all these lessons, we are going to perform the exercises also. I'm going to give you the data, sample data, to execute all these scenarios in the activity based approach. And I will explain each and every file, data file, transaction data file, how the control data will be maintained, how the activity is assigned, which FS items the activity is assigned, what is the format of this particular CSV file. So some when partial transfer happens, how to maintain the transaction data, how to feed the data to the SAP system, to a group reporting. When total divestiture happens, how to feed the data. When partial divestiture happens, how to feed the data, how to maintain the control data. When capital increase, when step acquisition happens, how to maintain the control data in the CSV file, and how to load that one. How to load the data, you know. So how to maintain the transaction data for a particular, so what transaction type should be used. So when it is a 901 transaction type, you can easily understand it's an incoming unit entry. When it is a 998 transaction type, you can easily understand it's outgoing unit, right? When it is 940, one meaning. When it is 960, one meaning. When it is 970, it's merger, right? So when you are maintaining the data, you have to maintain the data against the proper transaction type, proper activity, that we are going to understand in this particular course. So we have exercises for Central Europe, we have exercises for Southern Europe and Europe group, Central Europe and Europe group, first consolidation and subsequent consolidation, Eastern Europe and Europe group. Why two groups every time I am mentioning? So subgroup and main group, both the consolidations. How the minorities in goodwill calculated at main group level, that also we are going to understand. So with this first unit one, this is unit one. With the unit one, you will understand how to perform first and subsequent consolidation using activity based approach. And one more point, this course includes rule based approach also for the total divestiture, capital increase, and step acquisition. First we will start with activity based approach, then we will move to the rule based approach. Then we have, so all this first, so in this example, as per the document, in this example we have taken period 3, 2025. Actually, let's say period 3, you can see here period 3 2025 as my first consolidation period, right? Any period you can take as your first consolidation period. You have to maintain your structure accordingly, right? So period 3, we 2025, we are going to take it as a first consolidation and subsequent consolidation period, first consolidation period. And in the same period we are going to run the subsequent consolidation also, because first consolidation at the beginning of the period we are going to perform. So you will get subsequent consolidation also in period 3. In the period 4, we are going to using activity based approach, right? We are going to understand what is step acquisition. First we will understand what is the period 4 exercise scenario. So in this I'm going to talk about step acquisition, which is investment increase, holding company investment increase in the subsidiary. So how the elimination data sets, when it is step acquisition, right? Already first consolidation goodwill is calculated, it's one time entry. When the step acquisition is happened, what is the impact on the goodwill, what is the impact on the minorities, what is the impact on the elimination? So that we are going to understand, the eliminations we are going to understand based on the step acquisition. Same way, when the capital increase happens, so my subsidiary increase their capital, right? When the capital increase happens, definitely there will be, if the capital increase happens, there might be a change in the investment percentage. So 300 euros, my capital I increase it to 330 euros, the subsidiary increased to 330 euros. When the capital increase happens, right, there might be a change in the investment percentage accordingly, or there might not be a change in the investment percentage. If it is a change, for in this particular example, capital changes the investment percentage. So how your investments are eliminated? Zero investment there, because capital increase, investment is not increased. So the goodwill is changed because capital changed, investment is not changed, capital is changed. So goodwill calculations will be there. Minority, there will not be any minority calculation, but because you minority percentages are not changed, but capital minority percentages are changed. Why? Investment percentage changed. So minority calculations will be discussed, and we will maintain the data for the step acquisition and capital increase, and we will execute those exercises. See here, so here I'm going to we are going to perform the step acquisition exercises, and we are going to perform uh, capital increase also. So then also you see it's you see many activities are done in the active period 4. Not only step acquisition, we also have partial divestiture. So you have invested, for example, Switzerland invested 60% in France, right? So they now they want to make it that 60%, they want to decrease to 50%. Switzerland decided to decrease their 60% investment to 50%. That's what divestiture, partial divestiture. You are not taking, not decreasing 100%, you are just decreasing 10%. Right? That is partial divestiture. So we are going to understand partial divestiture here in this period 4. How, what are the entries are passed by the system, and accounting method change. So in period 3, I told you at equity method. Poland invested in Hungary using at equity method. 30% they invested. Now Poland decided to increase their investment to 60%. 30% they are going to increase. So 30% earlier investment, now they want to increase to 60%. So there is an accounting method change. Equity method to purchase method, you have to change that particular structure, right? So when it is an accounting method change, how to handle that? There is a workaround how to handle that. So we have partial divestiture exercise, we have accounting method change exercise, we have step acquisition exercise, we have capital increase exercise in the period 4. So period 4, these are the activities we are going to cover. In the period 5, right? So period 5, as per the document, there are no exercises, but we are going to exercise. I'm going to give you the data. We are going to define the exercise. We are going to execute the exercises. We are going to execute the exercise for the total divestiture. What happens when particular investment is taken back by the holding company? 100%. So we are going to understand period 5 scenarios. As part of period 5 scenario, total divestiture we are going to talk about, and we are going to execute the exercise total divestiture, and we are going to understand partial transfers. So I have Central Europe group, I have Southern Europe group. From the Central Europe group, right? One particular, for example, in the Central Europe group, I have Switzerland invested in France. Now Switzerland decided to sell 20% of this share to Southern Europe. Southern Europe group. There is a Spain. Spain is part of Southern Europe group. So Switzerland selling 20% of their France shares to the Spain. Both are there. Both are in one group only, Europe group only. So that's called partial transfer. Within the group, when the sale happens, by purchase happens, share percentage, shares sale and purchase happens, that's called partial transfer. So there is a difference between partial divestiture and partial transfer. Partial divestiture, whatever percentage decrease, that you are going to sell it to the third party, not within the group. Partial transfer, you are going to sell it within the group. That's the difference between partial divestiture and partial transfer. So we are going to execute the solution, right? In the system, we are going to practice this particular partial transfer in the system. I'm going to provide you how the data should be maintained for this particular partial transfers. Then we are going to understand mergers, right? So mainly we are going to understand horizontal mergers. There are two types of mergers: vertical mergers and horizontal mergers, but in the course scenario they have given horizontal merger. So we are going to understand how the horizontal merger performed, how we are going to maintain the data, and we are going to understand how this particular horizontal mergers. So for this also, exercises are not there, exercises optional, but I will give you the data, right? How to maintain the data. Even we are not going to execute the exercise, because in order to execute the merger, SAP, we have to tell the SAP to activate the merger activity for your customer, then only it will execute. But you will get the files and everything. Only thing we are not going to discuss, when you execute the task, you are not going to get the entries, because of this particular merger activity for your customer. Yeah. But you are going to get all the documents, all the transaction data required for this, and I will show you all the steps to execute this merger. And we will understand, theoretically we will understand entire scenario. Then with this we complete activity based approach. Then we'll start rule based approach, right? So rule based approach, we understood that rule based approach, we know how to perform first consolidation, subsequent consolidation, right? But in the rule based approach, there is system can't we cannot configure we cannot configure minorities in goodwill. Subgroup we are going to do the consolidation. Then that whatever goodwill calculated at subgroup level, it should be minorities in goodwill should be calculated for the main group level. That particular part, right? Minorities in goodwill calculation not possible using rule based approach. And at equity method not possible with rule based approach. So for that, how to maintain how to create the manual postings. So for example, at equity method you are executing for your customer. So your customer is following the rule based approach, right? At equity method, now they have at equity method, they want to understand how to post those manual entries, what are the manual entries required, how to post. So we are going to understand, we are going to prepare. See, if you see the exercise, perform at equity method manual postings. We are going to perform first consolidation, subsequent consolidation, calculation of net income, all those stuff for the rule based approach. And particularly the minorities in goodwill, at equity method manual postings, how to maintain that particular journal entries, that manual, how to post those manually, that we are going to understand in this rule based approach. And rule based approach, we are going to configure. So we are going to configure the method sequence for the total divestiture, step acquisition, and capital increase. So you can see those exercises here. Yeah. So this is the course content. In this content, both the approaches we are going to understand, whatever possibility, right? We are going to understand. And this course is designed for 30 hours, but it will take more than 30 hours. Yeah. And so this, I will provide you transaction data files, configuration steps, whatever we are going to perform. And using those files, you can, using the documents, whatever I provide, you can easily execute the exercises. And it's a hands-on exercise. If you want, you can execute the exercises with me parallelly, right? Because why why you can execute this these exercises parallelly, because it's not the based on the configuration. We are not going to change any configurations, right? We are going to test the system, and we are going to understand whatever 1SG delivered. So this can be done parallelly with, with if you have S4 HANA server. Not, no need to use the S4 HANA server what I use. You can have your customer server also, or your own server also, not a problem, right? So configuration steps, data files I will provide. Sessions are not recorded. You can attend multiple times, until you understand, when until you feel comfortable. You can attend my sessions. No need to, it's not like one time one time you attend. You can attend multiple times. Session time India 6:30 a.m. to 8:30 a.m. So 2 hours, 2.5 hours, one day we will discuss. And you, S4 HANA 2022 we are going to use, and I can share the same vendor, whatever server I am using, I can share that those vendor details. And course cost is 30,000 INR. And it's, I mentioned 30 hours, but it will be more than 30 hours. This is all about the course. Yeah. Any questions? I'm stopping the
Then
recording.
i-
Yeah. Go ahead. Go ahead.
is it going to be weekend 2 hours like Saturday and Sunday Indian morning time?
Correct. Saturday, Sunday, weekend. Saturday and Sunday weekends. Where I mean weekend 6:30 to 8:30. Saturday and Sunday. Yes.
Okay, thank you.
Yeah, you can unmute yourself.
Okay, it's 6:30 to 8:30 a.m. India time.
Yeah, correct.
Okay.
So it will be, so for example, if it is US,
Yeah, it's
it will be
Friday evening.
Friday evening.
Yeah.
Yeah.
Okay. Yeah. So, are you going to start from tomorrow onwards, or when is it?
From tomorrow, yes. So tomorrow is the day one session. We are going to understand the course scenario. Okay. So anything, just send an email.
Kiran,
I will. Yeah, go ahead.
we have to pay separately for the vendor for getting the access to the
Correct.
system.
Correct. Correct.
Okay.
So
And
if you
how
have
much is that?
already a group, he will take per month. He is taking 2,000. For 3 months. He is taking 5,000 INR.
Okay.
Right. So the same server I use for whatever server I use for group reporting, same server we are going to use for the advanced consolidation of investments. Yeah. Okay. So